Welcome to the FinTech One-on-One podcast. This is Peter Renton, co-founder of FinTech Nexus and now the CEO of the FinTech consulting company Renton & Co. I've been doing this show since 2013, which makes this the longest running one-on-one interview show in all of FinTech. Thank you so much for joining me on this journey. Now let's get on with the show. Today on the show, we are going south of the border down to Mexico, where I am delighted to chat with Roberto Salcedo. He is the CEO and co-founder of Baubap. Now, Baubap is a microlender, really interesting company. They've been doing small loans. These are sub $250 loans now for several years. But what really attracted me to them was their underwriting. They have been doing AI since before it was trendy. They've developed these underwriting models using data from an Android smartphone. That is really the basis of their underwriting models, not using financial data, using data from the cell phone. Now, and their default rates are extraordinary for an unsecured consumer loan. Certainly some of the subprime lenders here in the US would love to have default rates this low. So it really is fascinating to hear more about how they're able to do this, how they have developed underwriting models with approval rates improving dramatically over time and yet keeping their default rates the same. You will learn all about it in this fascinating discussion. Hope you enjoy the show. Welcome to the podcast, Roberto.
Thank you very much for having me here, Peter. Been a follower of your content for a long time. So very much looking forward to this discussion we're going to have.
Okay, well, that's good to hear. I'm looking forward to it as well. Okay, so let's get started by giving the listeners a little bit of background about yourself. Can you just hit on some of the highlights of your career to date?
Of course. Where to start? Well, I was a banker, for better or worse. So I was a banker for 12 years. I was actually one of HSBC's top 1% credit underwriters for large corporations. So I used to service basically traditional lenders. So auto loan companies, mortgage companies, personal loans companies, credit card companies. So all sort of financial service providers. And so I had a lot of fun. I learned a lot. I used to go really deep into their business models, into their underwriting models as well, in order for me to underwrite loans, create facilities, capital structures for them. And then I moved on from HSBC and I joined another Mexican bank called Invex Bank. And I had a fantastic time there, leading their corporate arm, their corporate banking arm. I led Invex Bank's largest finance deal in Mexico to date. And after all this experience as a banker, I got invited to join as the chief financial officer of a media company here in Mexico. And this was like 9 years ago. And back then, it was a very exciting opportunity for me. I've never been an operator before, always a banker. So becoming an operator myself was extremely entertaining, very challenging, lots of learnings. And that's where I met my co-founder. He was the CTO of the company. And we started working together. We implemented the ERP from Oracle at that company. And that was like a terrible experience. But that's how we became a team. That's how we met each other. That's how we became friends. And we started talking about building something together. And I have lived through the problem Baubap is trying to solve with my own family, with my own parents. So I was very close to the problem and I thought I knew how to solve it. And we've been building together since 2018 now. And it's been quite a journey and happy to share more about it in the podcast.
Yep, sure. So I'd love to kind of get you had the idea because you said this is something that your family, and obviously lots of families have. I mean, it's not just in Mexico, but around the world. I noticed you didn't mention any consumer lending experience in your background here, right? So I imagine that was, or was that a major learning curve you had to go through?
No, the interesting thing is that I didn't have first-hand experience, but as an underwriter at HSBC, I had to go into the models, I had to understand how other
Right.
people were originating consumer loans. So I went from everything from mortgages to auto loans, to personal loans, to payroll loans. And I love the businesses because they provided me a lot of understanding around why there was such a huge underserved population in Mexico and in most emerging markets. And so I was able to connect the dots. So, okay, this is the piece that is missing here. This is why these traditional lenders are not able to serve this underserved population. And that's where the expertise came from. Yeah.
Okay, that makes sense. So then let's dive into that. Why is there such, an large underserved segment of the population in Mexico? Latin America in general has come a long way and over the last 5 to 10 years, but seems like Mexico hasn't as much. Why is that?
I think it all has to do with the economic challenges a large part of the population have. So 95% of Mexican workers make less than $750 per month. Mm-hmm. So that means that most people are low-income people in Mexico, right? And then we have 60% of workers operating in the informal economy. So that represents even another layer of challenges. So to me, it was like these people are in desperate need of very small amounts of money. So it's very difficult to traditional players to reach out to these customers profitably in a cost-efficient manner because they have thousands of employees, thousands of branch, such large infrastructures. So it becomes very challenging to adapt into the digital world rapidly and start servicing these consumers, right? And the other main challenge is that people have very little banking activity. So there is not much data to underwrite loans for people that work in the informal sector because they don't have banking activity, they don't have a credit history. So there is not much to go on there for traditional banks and traditional lenders.
Right. Yeah, that makes sense. And one of the things that strikes me, I've been in Mexico City on a Friday afternoon and seen lines at the ATMs there. The average Mexican seems to be very much cash oriented. And does that make it harder for companies like you guys to really get scale?
I think it makes it easier for us, harder for banks and traditional players. The thing is that even people who have bank accounts are very used to basically going to the ATM and withdrawing the entire balance of the bank account, right? What that means is that a bank has no data points to underwrite to these customers because there is no much data there. There's only a deposit and a withdrawn from an ATM, which is also a very unprofitable transaction for any bank, right?
Right.
That's where banks are starting off with this population. And for us, we built everything based on using only alternative data to underwrite loans.
Gotcha.
So no banking activity, no financial history, no credit reports. So we built this on the entire idea that there were other data patterns that we could leverage in order for us to underwrite this huge amount of people cost efficiently and with accuracy, right?
Right. Okay, so let's dive into Baubap and your core product. I mean, obviously, you're a consumer lender. What is your core product?
Of course. So we service all of our customers through an Android app. And it is through the app that we extract all device data from a user's mobile phone. So, for example, SMS, contacts, calls, calendar events, applications, geolocations, the digital footprint of the device, and the digital footprint of the phone line. And we then combine all this data with the user-provided info in order for us to create thousands of features that we then feed into 15 different in-house built machine learning models and LLMs. And it is all this core technology that has contributed to Baubap getting the best default rates in this market, in the consumer market in Mexico. So our core product is a 30-day term loan that starts at $25 and can go up to $250. and it's a loan that it's always available, and it's delivered to the end customer within 30 seconds of the underwriting decision. So that's the core product.
There's quite a lot to unpack there. So I'm really interested in the underwriting because, as you said, like these people are, they might be taking out their money from the bank. They're not in any database that you can use for underwriting. So I guess I'm curious about the underwriting model you created that used this alternative data. Did you create that from scratch? How did you know what data sources? How did you know how to improve it? Just tell us a little bit about the journey you've taken with your underwriting.
Of course, a lot of creativity was required in order for us to make this technology work, especially at the beginning, because it was pure imagination. So we came up with the hypothesis that the data that we were building ourselves in our mobile devices by interacting with them throughout any given day had correlation with our economic activity, with our payment capacity, and with our willingness to repay a loan. So that was the entire premise of everything, right? And so we took a leap of faith and set ourselves to start extracting this data first with our own devices. So we extracted the data from our own devices and started imagining if I am a banker or I'm the CFO of this company, I should have emails around this activity. I should have text messages around this activity. I should have a different way to communicate or to write down or to take notes, or my calendar should look like this, right? So that was, in essence, how we started finding insights, powerful insights around this data. And we started with our own data, and then we launched the app. We launched the first beta of the app on the Play Store, and it didn't lend any money because we were not capable of lending out any money yet. But it was a loan request. They had to fill up a loan request, and we could extract, with their permission, of course, all this device data. So we started doing this, and we got like 20,000 downloads organically, with just people willing to share their data to get a loan. And with those initial 20,000 users, we built the first features, the first models, and we started then testing out different models, different patterns, looking for different patterns. And we were very early in AI. So we started using foundational models as early as 2019. We started using BERT, Google's first LLM, to classify all text transactions and to get insights from those text transactions. So I guess that's how we got started, and it started to evolve extremely well, right? So now it's a large set of different models for different purposes, because we also did everything ourselves. We not only do underwriting, but we do fraud, we do identity verification, and we do KYC ourselves. Wow. So the entire platform was built on this idea of only using models, only using predictive AI, generative AI to deliver the service as cost efficiently as possible.
That's really interesting. So you've decided that you're going to be the developer of everything. That's a really interesting way to go. And I'm curious about how things have developed. Like your underwriting model, you're talking huge amounts of data, I imagine. You've probably got thousands of data points or more for every single user that comes in. So you're talking about pretty large data sets. How have you improved that, and how has that kind of evolved as far as, I'm particularly interested in like improvements in default rates and how you're able to use your knowledge and understanding of the past to keep getting better?
That's where having gotten early into this technology really paid off, because we were early adopters of everything, right? So every new release of BERT, every new release now of Llama, that is one of the models that we use now locally. So every new release, every time a model got better, we got better, and we were able to start optimizing, keep optimizing hyperparameters, and of course, updating the sample that we were training all the models with. Now we've given out 8 million loans in these 6 years. So now we are training with a massive data set that has become our competitive advantage. So it is that massive data set that allows us to be very accurate, very precise, and to use different ranges of models for different purposes. So I guess that's what happened.
And it's great that your loan term is so short. So you can tweak things very quickly, I imagine, and being able to, to change your criteria. Maybe on that, what is the approval rate? Because obviously you're going to have some people, they're going to be a really high risk customer, and you're not pulling in, this is no financial data, right? Like when people download the app and they go and apply, what are the chances they will get a loan?
Of course. And this is where the most of the improvement of the models has benefited us, because we started with very small approval rates, right? I remember back in the day, we were approving like 5% of the new applicants, right? So what ended up happening, and this is where it got very interesting for us, is that we massively improved approval rates. At the same time, we kept default at bay. So we kept default, especially early payment default, within healthy buckets for our business. So now we get 40% approval rate for new applicants. Okay. So 40% of a new applicant will get an offer from us. And then the first payment default right now is around 15%, which is something unseen in this market with that high an approval rate.
Right. And these are unsecured loans, right? You're not securing against anything?
That is correct. These are unsecured loans.
Right. Okay. And if you could, I know you don't want to give away your secret sauce, but I'd love to get a sense of the underwriting when you're looking at the data on someone's phone. Like, what are some signals that are good and what are some signals that are bad for these people?
Of course. So it looks different. And this is the superpower or the supercomputing power of the models, because it looks different from customer to customer, So some customers will get rewarded by the models for some reason, and other customers can get punished by the models for some other reasons. So this is a wide range of data patterns that the models go through, right? So for example, for our probability of default, we use SMS data, right? Text data. So the text message data. And one of the very interesting insights that we found early on was that customers who text at night behave better in payment behavior than customers who text during office hours. So it was a small patterns like this that we were not able to find, but actually pick up the phone and start talking to customers and trying to learn why this was the case. So for example, with this example, we validated that people, especially informal workers, are very engaged with their economic activity during office hours, so are unable to text during office hours, so they text at night. So This was very interesting for us, and we were able to build thousands of insights just like this one, and this is why it became really powerful.
So who is the typical Baubap customer? Are they people in the informal economy? Are they what type of jobs do they have, and what are they using the money for?
So for that, I always like to share a customer story. So around a Baubap customer, so Mrs. Patricia Peña. So Patricia makes quesadillas as a street food vendor in Mexico. And before discovering Baubap, she was rejected by 5 different banks, essentially having no banking history, no banking activity. And she was then unfortunately scammed twice while getting an informal loan, losing the little savings she had. So this is another huge risk factor for this population in emerging markets, especially in Mexico and other Latin American countries. And it was because of all this that she discovered Baubap. And with a loan from Baubap, she began to chip away at these personal debts and actually being able to reinvest these small amounts of money into her economic activity. So buying raw materials, buying inventory for her very, very small business. And around 50% of our customers are informal workers, just like Patricia. And what it's been amazing for example, in Patricia's journey is that in the last couple of years, Patricia has made $20,000 through Baubap's referral program. So referring customers to Baubap, which is astonishing.
Wow. That is. And how much are you giving away? How much do you give away for a referral?
It can go up from $10 up to $25. And now we treat the referral program as a product itself, because it has so much engagement from our customers that we decided, let's build this as a product itself. So now we have different levels, different rewards. We have given out $2.5 million to our customers who have referred another customer for us. So that money couldn't be in better hands.
Right. That's great. So beyond referrals, because obviously that's a pretty major source of new customers, it sounds like, but you said you've had 2 million roughly customers who have taken out loans. How are you reaching these people for the most part?
Of course. So half of our customers come to Baubap through the referral program or through organic efforts. And the other half, we use traditional paid media, Facebook, Google, TikTok, a little bit of everything. So it's a nice, interesting mix that provides a blended CAC that is profitable for us. So we use affiliate networks, DSPs, so different partners for that other 50%. But we need all the traffic to go into the app. And I think that's another key element of what we do, because app traffic is a lot cheaper than web traffic. So everyone that is trying to compete in search for these kind of leads are paying huge amounts of money per lead. And for us, it's a lot more cost efficient.
That's really interesting. So then what's the process like? What data are you asking during the application?
Of course. So we have a very simple loan request in which the customer provides personal info, work activity info, this sort of traditional loan request. And then at the very last step of the loan request is provide access to the data we extract. So customers have to opt in. We've been GDPR compliant almost from day one because we understood this was our source of power. So we take the data privacy extremely serious. So customers need to consent for us to extract this device data, and they need to understand how we are going to use this data, and that we are not going to resell this data to anyone. We're only going to use it ourselves. And the purpose is for us to make an underwriting decision, right? So once we got all the data, it takes us about 30 seconds to make the credit decision and to fulfill the rest of the disbursement process of the loan. So it's a very, very straightforward process for our customers.
And how are you dispersing the loan? Does that go into a wallet, or what do you do?
We basically can do anything our customers want. We prefer to wire transfer the funds. So customers who don't already have a bank account or a wallet account can open an account through our app with an API we have with a third party, in case they don't have an account. But we can do anything our customers prefer to. Yeah.
Right. Okay. Interesting. I saw in the news earlier this year that you guys landed a $120 million debt facility. I thought that was quite an achievement. Can you tell us a little bit about that process and how you were able to land that?
So I think one of the key factors about being able to scale this business has been profitability. We've been profitable for the better part of 3 years now. And I think this is almost unheard of in fintech lending. And the main reason was because the technology actually worked in delivering great payment results for us. So we were able to access debt funding very early on, as early as 2021. And we raised a first facility in Mexico from a debt fund here in Mexico. Then we raised from a US debt fund. And then we started really scaling up. And last year, or at the beginning of this year, we raised this $120 million credit facility, essentially based on the amazing results and the amazing performance and the stability of the loan book, of the loan portfolio, even though we had massively scaled loan origination, right? So loan origination grew in the last 3 years like 300 times. So we originate now 300 times more money or more loans than we did 3 years ago. And we basically have the same default rate. So that's why the funds got comfortable with us and we're able to size up the facility. And we've been deploying from that facility for all of 2024. And we have a still good amount remaining there. So we are able to keep growing for at least the next couple of years.
Yeah, that's one of the great things about your product too, is that you don't need a big facility to do massive amounts of volume because the loans turn over so quickly. Looking at the state of fintech in Mexico, there's obviously lots of fintech companies now, but you are in a competitive market. You may have the upper hand on most of your competitors, but I'm curious about how you're looking at expansion in the future. I mean, are you looking at staying in Mexico? Are you looking at going into other countries in Latin America? What are your plans?
Of course. So right now, I can confidently say that we will win Mexico. The product is scaling significantly. We will start doing other very interesting things based on AI. We've already have UX-based AI that we are delivering for our customers. Our customers right now are engaging us through voice. The company in Mexico will keep maturing and we'll keep lending out money ourselves in Mexico. However, the next phase of the platform is transforming our entire platform from underwriting, KYC, fraud, servicing, everything into a platform that we can lend as a service, that we can allow other brick and mortar players to use as a service to originate loans to the underserved in the emerging world. And for this, we are very much looking forward to expanding into other Latin American countries first. But the go-to-market strategy there is to start partnering with large brick and mortar lenders, large brick and mortar banks, so they can plug into our entire platform and they can start servicing the people that they are not being able to serve right now in a profitable way and in a way that they capitalize on the technology we've been building for 6 years. So that's what the future looks like for us.
Have you started doing this sort of lending as a service product, or is this something you're planning to launch soon?
This is something we are building now, and we've already started partnerships in Mexico to start testing out the platform and building everything we do to package this platform and resell it. So I think this is going to materialize within the next couple of years. And it's one of the reasons that we are fundraising right now. We haven't raised for 3 years. Mm-hmm. You know, we were extremely capital efficient to get to this scale. But now we are raising essentially because we want to fund the next phase of the go-to-market in Mexico, of course, and in other emerging markets.
Right. Well, we'll have to leave it there, Roberto. It's really been great to chat with you. And I think what an interesting story you have. Thank you for coming on the show, and best of luck with you.
Of course, Peter. It was an amazing discussion. And like I said, I was very much looking forward to talking to you. We've been a great fans of your podcast and all your content for a while now. So happy to share a little bit more about Baubap and myself with your audience and with you.
Okay, well, thank you. I'm blushing now. So it was great to chat with you. Well, I hope you enjoyed the show. Thank you so much for listening. Please go ahead and give the show a review on the podcast platform of your choice and go tell your friends and colleagues about it. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye.